Heya Cryptozens, tonight's show. Starbucks enters Web3. India unfreezes WazirX, and Bitcoin ETF news. It's 10 p.m. Pacific and the date is September 12th, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together, we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. Is this what mass adoption looks like? It might be. I do know that we're in the middle of a crypto winter. And NFTs have really been hurt in terms of market cap. Yet the companies, they keep coming out with NFTs. Car companies like Ford, clothing companies like Nike, even status brands like Gucci and Jimmy Choo are all getting in on it, which makes sense because some people treat NFTs like a status symbol, so I can see how you get there. And now Starbucks has stepped into the Web3 space with their own NFT plan. According to a new post put up on Monday, Starbucks said that they're going to give their U.S. customers the ability to buy or earn digital collectible stamps. And it seems like, if you're a gamer, you know what I mean. Starbucks has introduced its own achievement scoring thing. Here's what I mean. Each stamp will have its ownership verified on the blockchain and some sort of a point scoring thing for rarity. As you add to your collection, your points increase. This unlocks what they're saying are unique experiences. So it's called Starbucks Odyssey. Starbucks says that the rewards that you can unlock range from a virtual espresso martini making class to unique swag, invitations to exclusive events. And they're doing the smart thing. They're going to make this simple for people. Users can buy NFTs on the built-in marketplace without connecting their wallet and without using any crypto. That said, I don't know if there's any way to transfer the NFTs off of the Starbucks ecosystem. You would think so. It's an NFT. It's built on the Polygon chain, so yay Matic. You'd think they could manage it like any other Polygon NFT. And as far as the NFTs themselves go, they're apparently going to include iconic Starbucks artwork. I believe this will mean new art with Starbucks partners and independent artists. And with those artists, they get to pick a cause, and a portion of the sales of the digital stamps will go to that cause picked by the creator. I'm not sure how that works if you earn it versus buying your NFT stamp. Brady Brewer is the Vice President and Chief Marketing Officer at Starbucks. He said, quote, "We are entering the Web3 space differently than any other brand while deepening our members' connection to Starbucks. Our vision is to create a place where our digital community can come together over coffee, engage in immersive experiences, and celebrate the heritage and future of Starbucks." And so this isn't really new news. Back last May, they kind of hinted that they were working on something. They did say that they were planning on launching a series of NFTs providing, quote, unique experiences, community building, and customer engagement. Now, if you're interested, and I've already done this, you can go to waitlist.starbucks.com. It's a pretty painless process, actually, compared to getting on some NFT whitelists. And I'm interested in this sort of base level mass adoption kind of thing. Look at what a lot of the NFT market is. Most of the big money is still flowing into the profile pic space. But maybe this will bring things like NFT gift cards or NFT discount cards. Let's say you're an early investor in an NFT marketplace. So they drop a discount card on your wallet, and that card gives you 5% or whatever discount on anything in the marketplace. And you could even go further. Make that card so it can only be transferred so many times before it evaporates, or make it soul-bound. Or maybe every time you transfer it, the discount is reduced by 1% every time it's resold. That's right, resold. It's an NFT. If I stop shopping at this store, I could just put my card up on the marketplace or do a person-to-person sale. There's a lot of ways these companies could be very clever here, using NFTs to identify customers through their wallets. So yeah, silly little NFTs like Starbucks is offering probably aren't going to net you a whole lot of money if you were to dump them on OpenSea, but I like seeing them experiment. And think about this. The Starbucks app is the second most used form of mobile payment in the United States. And sure, exposing people to these digital assets you can collect, trade, and sell, that's awesome. Just don't call them NFTs. That's not really a good fit anyway. But getting that idea of digital asset ownership in front of the people, that's worth supporting a few silly NFTs that aren't going to be worth a buck on the open market. At the time of writing, the global crypto market cap is $1.07 trillion. That's up 0.82%. The top 5 cryptos by market cap are Bitcoin up 3.15%, Ethereum down 2.33%, Tether, USDC, and Binance Coin down 0.64%. So remember recently, back at the beginning of August, which feels like an age ago, but it really was just last month, WazirX is one of India's largest crypto exchanges. $2.9 million in trading volume every 24 hours. They got themselves in trouble with India's Enforcement Directorate, or ED. See, the ED accused WazirX of facilitating some money laundering, and so they froze the bank accounts belonging to the exchange, over $8.1 million, that they knew people were engaged in money laundering, quote, via purchase and transfer of virtual crypto assets. That's 16 fintech firms that use the exchange to send crypto assets to, quote, unknown foreign wallets, using instant loans to cover their tracks. All of this is allegedly, of course. These are apps that make short-term loans. And we're not talking about small change here. The accusation said WazirX had processed $130 million in transfers of funds for criminal activities. ED found that of those 16 companies allegedly laundering money, most of them had already been blocked in 2020 and 2021. At the time, they said they had a, quote, ongoing money laundering investigation into Chinese-owned illegal online betting applications. And so it came to pass that they issued WazirX a show cause notice as part of their investigation. At the time, they said, quote, WazirX clients could transfer valuable cryptocurrencies to any person irrespective of its location and nationality without any proper documentation whatsoever. And then there was this whole weird thing going on where Binance, who had been interested in WazirX back in 2019, anyway, they distanced themselves from WazirX, which is weird. Well, that's all over now, because the ED has unfrozen these bank accounts. That's according to an update put out by WazirX. In their announcement, they said, quote, WazirX has been cooperating with the investigators by providing with all the necessary details, information, and documents of the alleged accused companies who use the WazirX platform. And so those accounts were unfrozen after WazirX apparently cooperated with the ED's investigation. And they apparently showed AML checks that blocked suspicious accounts, which seemed to be just what the ED wanted. WazirX's announcement said, quote, due to the active cooperation extended by WazirX and anti-money laundering checks that had led to the blocking of suspicious accounts, ED has unfrozen the bank accounts of WazirX. WazirX is now in a position to continue its banking operations as usual. Also recently, the ED froze Yellow Tune's bank account too. $46.4 million on that one. And the accounts for the crypto exchange FlipVolt were frozen, again, accusing of money laundering. In this case, the company has been accused of being a front for Chinese business interests. The global NFT market cap is up 48.17%. According to CoinMarketCap, the top 5 NFT collections by sales volume are Mutant Apes, followed by Clonex, Bored Apes, Otherdeed, and Pudgy Penguins. Keep in mind, some of these collections have very volatile prices, so do your own research. The Chamber of Digital Commerce is a crypto advocacy group. They're putting pressure on the Security Exchange Commission to approve applications for a Bitcoin exchange-traded fund. They put out a report on Monday, the Crypto Conundrum. And in this report, they said the U.S. is behind because in other countries, their residents have access to crypto investment vehicles, to include Bitcoin exchange-traded funds. They said they were, quote, no reported instances of hacking or theft and no indications of market manipulation related to Bitcoin ETFs. Now, reading between the lines, they seem to be suggesting that the SEC was wrong, that denying those applications was, quote, misguided and counterproductive. They said, as the SEC continues to stonewall, the U.S. continues to fall further behind other countries as capital that would have been invested in the United States, which would be managed by U.S. firms employing U.S. persons, is instead deployed in another more innovation-friendly countries. They also push back against the SEC, specifically bringing up its obligation to protect investors, that in order to protect U.S. investors, they need to approve a Bitcoin ETF. Here's their reasoning. By denying investors access to a Bitcoin ETF, those investors are now at a greater risk that they would, quote, acquire their exposure to crypto in a less regulated and or foreign environment where they are much more susceptible to unscrupulous actors and the risks of self-custody. They said, the SEC has now positioned itself as a merit regulator on this matter. It has determined that the American public cannot yet handle the responsibility of familiar, cost-effective, liquid, transparent, and regulated access to the Bitcoin markets. Unfortunately, the cost of this position has fallen and will continue to fall on U.S. investors and the U.S. capital markets, as others have done. This report calls into question the motivations of the SEC in continuing to deny Bitcoin ETF applications, that it might be political. They said Chair Gensler's actions to broaden the regulatory authority of the SEC, that working to ensure that they regulate the entire crypto industry was a, quote, jurisdictional land grab. They blame him for a lack of engagement between the SEC and token issuers. Perianne Boring is CEO of the Chamber of Digital Commerce. She said, quote, you would think that our regulators would be working with the industry to bring regulated products to the market for retail investors, but they've been stopped at every attempt over the past decade. Yes, Perianne, you would think so. But so far, the SEC has denied the applications from 16 different companies. They keep saying stuff like the rule changes to allow exchanges to list ETFs were not, quote, designed to prevent fraudulent and manipulative acts and practice. That's directly in contradiction to reality, because there have been no reported instances of hacking or theft or no indications of market manipulation related to these Bitcoin ETFs anywhere in the U.S. or abroad. The Chamber's report claimed that the advocacy groups hadn't been effective in convincing the SEC to change their opinion on the matter. They said, quote, the United States is no closer to having a Bitcoin ETF than when Cameron and Tyler Winklevoss filed their first registration statement for a Bitcoin ETF in 2013. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. Take care of yourselves, but take care of each other too. See you tomorrow night.